All right, so let's get started. I actually am also going to be giving you the custom GPT, and I'll pop that in the document for you. So this is called the Black Book CFO. And this custom GPT, it's one of the very first GPTs I created for my clients because this is the money date that most people leave out. And if you're wanting to really start improving your financial IQ, it is about setting rituals and just starting to look at your numbers more regularly. And so this custom Black Book CFO is infused with my strategies around the different goals of a business and also the metrics that align with those goals. It's going to take you through a beautiful ritual. Today, I'm going to give you basically the output of what I've done. I've used the Black Book CFO and I've put in the Q4 goal setting prompts for these two different types of goals. And you basically will just pick which pathway you want to take, whether that is in profit optimization, just stabilizing your profit, or if it is in launching. And there's different metrics that relate to each one. As you scale your business, once you've got your launch metrics set up, then you can look at optimizing your profit, and then you have both. And then you're pushing a lot more levers in your business to make sure you keep profit sustainable as you scale. And this all comes back to the cash flow mirror spreadsheet, which you should have already started. So last session, we created your initial 90-day spreadsheet using the cash flow mirror. So what we're going to be doing today is taking that spreadsheet and starting to infuse the metrics into that spreadsheet, and then also start creating the budget or the forecast for the future. All right, so let's get started. I'm going to be sharing my screen and I'll just talk through this document that I've set up for you. Welcome to your Q4 planning session. We're going to be going through this profit planning session today, which is part of a money date, and you're going to be using the Black Book CFO. So I've included the link in here. Basically, all of you have completed your scorecard, and this is essentially like the pre-fill for the GPT to know that most people are in the declining tier and what this means. So you've done your scorecard, you've got your unique percentage. You know that based on this, that you likely have no clear forecast, no clear revenue plan, no structured money dates, right? And this is what we're working on today. We're starting to build out these assets, build out these rituals so that you can grow and know your profit and have that financial clarity. And so what we're going to focus on is just a quarter four to strengthen your financial foundation, clean up any leaks and step into your clarity. So this is a quarterly money date. And what we're going to be doing is setting your Q4 vision. And then we're going to choose your focus, scale, profit, delivery, or fast cash. We're going to pick your 3 metrics, and then we are going to break those goals down into 3 practical moves and then put them into the 90-day cash flow forecast. And then seal this with a ritual by joining me every Friday for your money day execution so we can come back, see how you're going, how you're tracking with those goals, and make any other adjustments. And this is just a great way for you to build out that money ritual. Like I mentioned, there's some prompts in here that you can copy and put into your GPT to help you to create your goals. But I have already done this for these 2 scenarios, right? So we're either focusing here on financial goals, either to understand and track your actual profit, or to fix leaks and to simplify your P&L and set up some systems, or to increase your MRR. So I know that 2 of my clients are currently in this bucket and 1 of my clients is currently in this one. So that's why we have the 2 pathways, and this is going to help you to just pick which pathway works for you. And then we're going to be breaking down the 3 strategic money moves. If you have a different goal, obviously this is why I've given you the prompts, because then you can put your own custom goal into Black Book CFO, and it will help you create the money moves. Okay, so you either then focusing on pricing your offers for better margins, or paying yourself, or forecasting income and expenses. And then we're going to end with the result below, which is just a simple, practical roadmap for you for the next quarter with your financial goals, your money moves, and the metrics that matter to the goal. So for scale is when you've repriced your offer and you're now scaling your business with this new offer. So this would suit Cressida and Shell and any new clients, Melissa, who are coming in and repricing your offers. This is probably the very first point of call that you would be focusing on this pathway. We'll just call this pathway 1, whether you want to do that in Canva or just do it on a Google document, whatever works for you. We are going to start looking at the 90-day forecast. So I'm going to take you through Xero and how you can set up your budget in Xero. I really think if you use systems, Xero is already tracking all your expenses. Let's just create a budget. What I like to do is just customize it in Xero first, export it, and then we'll plug in some numbers and then we know what we're doing and it all aligns. So we're going to be using the Cashflow mirror, which will then also let you know what your pay is for yourself. So once we do the forecast, we can plan out your CEO pay and then have that as your confidence figure around how much you're paying yourself. So you can pay yourself first, but obviously you need the income to come in to match that. And then afterwards, we're going to go through these metrics that matter. If you've chosen the scale, which is launching your new offer, the metrics that are relevant to scale. Now, again, the CFO Black Book has all this already pre-built inside. So all you have to do is say, I'm choosing scale. What are the metrics that relate to me? And this is the scale. So it's assuming you're doing a conversion event with calls and you're needing to track these metrics now. So make sure that you are tracking these. And this is why we're doing a weekly money date so that we can look at your booking rate, your leads, look at your conversion rate, start tracking all of these things so that you can know if you're going to hit your target. So that is for those that are launching new offers. If you're focused on just steadying the ship and making sure you have profit, you know your goals, you know what you're hitting, you understand your numbers, and this is the theme for profit. So this is like optimizing what's already there. So the first is you want to understand your profit and install a dashboard. Now, how we're going to do this is by using the cash flow tracker and metrics. And then once you've got that base set up, then we'll automate that with an actual dashboard. But I think for now, we need to get the numbers mapped out first before we just start automating things. Letting AI just run ahead and start automating things doesn't really work unless you know that the accounts are set up right, your goals are set up, and you know what you're looking at. I have created Canva cash flow dashboards, so it might be helpful to first pass it through this visual graph in Canva. And that way you can kind of see your snapshot for the future. And then I would track your budget actuals every month using your budget. This is also an opportunity if you're optimizing profit to just as a money date thing to have a quick look over your subscriptions or any profit leaks that you want to take action on. If there's a subscription that has been annoying you, then just cancel it today. So, and this is also where you can start having a quick look at optimization of teams or pricing, and just do any quick adjustment to that to help your business. And then you're going to set your money date. So every Friday, joining me here so we can just do your money date ritual, focus on what your goals are and start tracking your KPIs. And this is going to help you become more proactive and less reactive. So your money date scorecard, most of you scored very reactive. And this is why we want to really start doing this so we are a bit more proactive in our money dates. So if you're choosing the profits, these are the main metrics. I would just pick 3. So pick 3 that are really relevant to you. So we've got gross margin, which should be in your cash flow spreadsheet now. We can now add in this team utilization and average order value, especially if you are selling products. You can put your average order value in there from your Shopify. Team utilization. So this is looking at your billable hours over team capacity, or looking at maybe your revenue over wages to see how much it's costing you, like how much revenue is being generated by those clients. You might even want to do something like, if I'm just thinking Shani's business, you might also want to look at like material um, rate percentage. So we probably want to look at things like, so it'll be like material purchases over revenue. So you can see how misaligned, or if you're overspending on materials or doing something that's unusual in one month, like bulk buying, then we know that it's because of the materials, and we can understand why the gross margin is that way, because that rate will really tell us how effectively your cost of delivery is aligned. Yeah. If we're starting to get a lot of misaligned materials, that means, and it's starting to affect your numbers, then we need to move to things where it's more a purchasing materials, put it in inventory, and when you actually use it, that's when you expend it. And that will help your revenue and cost of sales align properly. You want to kind of avoid bulk buying. Yes, you do want to bulk buy to save costs, but in the accounting of it, bulk buying should really go to inventory because it's a lot of product that's not being sold in that month. So it's going to affect your gross profit margins, and this is why your numbers are up and down. So if you want to have a bit more predictable income, then when you bulk buy, that goes into inventory, and then you're just allocating how much you're using each month. So you would allocate like a third of that for the next quarter. And this will help us work that out. So when you get to this part, you've got your goals, you've got your metrics, and then you're going to create your money move. So I would just use the AI, or use this as an example. We're going to work through this now. We're going to work through this 90-day forecast. I'm going to switch over to the Zero files, and in reports, you'll be able to find where is it now? Budget variance. We might even just pop that as a star so it comes up on the main screen when you're looking at reports. I would suggest simplifying this. So let's do it together. So we're going to edit the layout. There's just a lot of numbers showing there. So what I want to do is actually customize the budget. So we want to just sort of separate out some of the key things. So let's say we want to just really focus on commercial. And so if you click there and you click there, you can actually group your selection. So this is like commercial income. Then you can focus maybe on, if you've got a different income stream, like maybe residential sales, residential, and then probably just something like ad hoc income. You don't want too many lines. This is just like, when I'm thinking of a budget, I'm thinking, can I plan this line? So residential, you should be able to look at prior months and like plan the budget for that. Commercial, yes, you've got commercial contracts, so you can plan for that. Ad hoc, you can't. So that's why it's good to just put it in its own area for the budget, because that'll just help you know that it's just not really anything that can be planned. So we're going to put the ad hoc income in there. I'd say all of these other things up here will just pop to ad hoc as well. Those are just like extra. Okay. And then cost of sales. The main thing I'm looking at for cost of sales is like, I can plan for labor. So we want labor. I can probably plan for material purchases. So I want that in its own area, because I can create a rate to an expected amount, material and consumables. And then everything else is just like labor on costs. So I would just put those to labor on costs. If they grow very large, then we'll try and split them out. We can just probably use a percentage in a spreadsheet and work that one out. Okay, labor on costs. Now this is a wage, so I'm going to move that up to labor. This looks like that's material. Looks like that's for material costs. So move that down to materials. Every income account has a expense account, which is why we're trying to make sure that we can create some good budgets for this. So everything else can just go down here for now. Tools and equipment, that can go back up to here. So I only really want other stuff down here. Travel, subcontractor cleaning. That sounds like that's maybe okay. All right, that's great. And then for the bottom, most of the expenses should be up the top. So you'll have revenue less cost of sales or direct costs, and then operating expenses should literally just be 2 lines as far as I'm concerned. So we're just going to do other income here. And then, so for operating expenses, I'm just going to do like admin and management, and then I'm thinking of like a CEO looking at your figures, anything to do with admin and management, like, payments to directors, wages for admin, super wages, super for admin, any wages for admin, wages, because we can plan for those. We will know how to estimate those. All this other stuff is just random expenses. Clearly, provisions will stick up here too. Everything else is just like other operations. And I'm just going on a basis for now that those would just be like same as prior months, other expenses. I would only split them out now if there's a significant expenses sitting in here I want to pull out. Okay, so that is your report. So I'm going to update the layouts. And then we're going to export this. Yeah, so you can see commercial income, ad hoc income, labor, materials. For the budget, we're just going to put one number, or you see how this like budget actual is actually going increasing or decreasing. So where we can, we'll estimate it. If we can't, we'll just put a total for the total and just look at the totals. Okay, yeah, I hate looking at decimals, so let's do that. Let's go. Don't want zero balance activity. For accrual or cash, I would just focus on cash mainly. That way you're just focusing on cash, name this layout. Oh, okay. So we want to save it as a custom report. So we'll call it budget variance C. Make that the default. Okay, so now it's going to show up here. So I've got some custom CEO reports and custom budget variance. Great. And when we go to reporting, it's going to show up here, great, in that reporting list, because I clicked on that little favorite star earlier. Now what we're going to do is we're going to export this, and then we're going to export to Google Sheets, and we're going to create our budget. Okay, so I'm just going to pause this while I set up a few things, and then we'll talk through this budget. Okay, so what we have here is now your budget variance spreadsheet set up for you. So once you've exported your budget from Xero, you should be able to put it into a Google Sheet like this, where you can have your budget. You probably best to do an annual budget of last year and then do a current quarter, and then look at that and start calculating what the next quarter should look like. Assuming, obviously last year is a good way to catch those annual expenses. The last quarter is a good way to see, okay, where are we now and what's increasing from here? Because there might be a very big increase or change in your business since the prior year. So you'd come in here and you would start calculating your budget variances. And this is what it looks like when you've finished. So you've got your last year, then you've got your estimate for the current year. You can start putting in your metrics and start checking your metrics. These numbers aren't accurate and they're not finished. But this will give you an idea of how to do this. So for example, if we go into, say, materials here, we've got notes in here about last year and what's increasing, and, there's new income that we're expecting. So what does that look like? And this is how you calculate like your forecast numbers. And then these numbers are going to go into your budget in Xero. So when you go back to Xero, you're going to go to reporting. Let's just go to all reports here. And when you've finished your budget, then you can import it into Xero. So you're going to come to this budget manager, and you can see how now you can actually import your numbers. So you can either import a spreadsheet into here, your annual budget template, and it will import the data, which is, I think, the best way to do that. Or you can simply just type in the totals. If you wanted to do it monthly, it's just a lot of data entry. So I would probably think about, I'm only going to look at the budget actual every quarter. So maybe this, you only do 4 data sets. So you just do the quarters. And that would be a good way then to have the data inside your file. So I hope this all makes sense, and I'm looking forward to seeing you take the next steps in creating your budgets and doing your money dates. And you can see as we're building, you'll be able to start looking ahead and know exactly what profit you are aiming for in the next year or in the next quarter. And I hope that this has really been helpful to you. We obviously will have opportunities to sit down and I'll review where you're up to and support you with if you're having trouble like estimating anything, or your spreadsheets, you're not sure what to do and how to calculate those assumptions and things like that for your budget. So, yeah, just know I've got you. This is a process that once you've got in place, it's like a system that repeats. So, once you've got your first quarter set up, the next quarter is easier because then you're just reviewing and slightly adjusting. The first time you do it is always going to be the hardest because you're starting something new. You're setting in place really good financial foundations for your business. And I think just keep it simple to start with and focus on what you want to create in your business and look at how you can improve the profit. The great way with looking ahead is you can actually make some decisions about increasing prices, reducing costs, looking at tendering, looking at new income opportunities, and be able to look at, well, what do I need to do, working backwards to create that vision. So have an amazing day. I look forward to seeing your amazing quarterly spreadsheets and seeing you in the weekly Money Day rituals.